Welcome to today's episode of the Deep Dive Credit Podcast, presented by Elite Credit Solutions. We are your trusted partner in affordable credit repair, proudly based in Tampa, Florida, and dedicated to serving clients across the entire United States. Join us as we explore the intricacies of credit management, share expert insights, and empower you with the knowledge you need to achieve your financial goals. Get ready for an enlightening journey into the world of credit. Let's dive in.
Everyone, and welcome back. We're diving deep today into something a lot of folks are talking about, the surge in student loan delinquencies here in the U.S.
It's definitely been making headlines.
Yeah, for sure. We're going to be pulling a lot from this Forbes article. It's by financial expert Shahar Ziv. And our mission, like always, is to break down why this is happening, what it means for, well, everyone, and what we can actually do about it.
It's a big one.
Huge. And honestly, kind of alarming. Did you know delinquency rates have basically doubled since those student loan payments started back up after, well, the pandemic pause?
Yeah, we're talking millions of borrowers who are now behind.
It's a lot of people.
Yeah. It's really a shock to the system. Imagine you've had this break from payments. Maybe you're even hoping for some loan forgiveness, and all of a sudden, bam, you've got this monthly bill again.
On top of everything else.
Exactly. Groceries are more expensive, gas is through the roof, and now this. It's a lot to handle.
No kidding. So for anyone out there who maybe isn't super familiar with all the loan lingo, can you explain, what does delinquency actually mean, and what kind of impact does it have on your credit score? Why should we even care about that?
Okay, so think of your credit score like your financial report card, right? When you're delinquent on a loan, it's basically like getting a big fat F on that report card.
Ouch.
And just like in school, a bad grade can have consequences. Lenders use your credit score to decide if they'll give you a loan, like for a car or a house, and to determine the interest rate you'll pay. A lower score equals higher interest, which means everything becomes more expensive.
So it's not just about the student loan itself.
Right. It's this ripple effect that can impact your whole financial life. And in some cases, a really bad credit score can even affect your chances of getting a job.
Wow, I didn't realize it could go that far. The article mentioned some people have seen their scores drop by 200 points.
Yeah.
That's wild.
Yeah.
But why is this happening now? I mean, student loans have been around forever, right?
Oh, yeah. They've been a part of the picture for a long time. But what we're seeing now is this kind of perfect storm of factors all hitting at once.
Like what?
Well, the end of the pandemic payment pause is definitely a huge factor. People got used to not having that expense, so now it's back, and it hits hard. Then you add in the Supreme Court's decision to block Biden's student loan forgiveness plan. That was a huge blow for a lot of borrowers who were really hoping for that relief.
So first the pause ends, and then the hope of forgiveness vanishes.
It's a double whammy, for sure. And remember, all of this is happening with inflation still high and interest rates going up, making it that much harder to manage your money.
Right, everything's more expensive.
The article even shared the story about a borrower who's on an income-driven repayment plan, which is supposed to make those payments more affordable. And they were saying there's literally nothing left for student loans after covering their basic needs.
That's scary. And it really shows how widespread this is. It's not just a few people here and there. We're talking a big chunk of the population.
It is, yeah.
And it's not just a personal finance issue either, right? The article mentioned how this is starting to affect the whole economy.
Oh, absolutely. Think about it. Millions of people all of a sudden have to redirect a big chunk of their income towards loan payments. That means they have less money to spend on other things.
Less shopping, less eating out, less travel.
All of that. And that slowdown in spending can start to ripple through all sorts of industries. Eventually, it can affect the entire economy. It's kind of a domino effect.
The Federal Reserve Bank of New York, they even reported a rise in credit card delinquencies among younger borrowers. They're saying that's partly because of these student loan payments starting back up.
It's all connected. And the scary thing is, if these delinquencies keep going up, we could be looking at a huge wave of defaults down the line.
Yeah, and that would be bad.
That's even worse. Default has even more serious consequences. It's not just for individuals either. It can mess up the whole financial system. We could even be talking about a potential financial crisis.
Okay, so the situation is pretty serious. But is anyone talking about solutions? What can we actually do to fix this?
There are definitely ideas out there, but finding something that works for everyone, the borrowers, the taxpayers, the economy as a whole, It's tough. It's complicated. The article talks about how Republicans and Democrats have different approaches.
I can imagine.
Republicans generally want stricter repayment terms. Democrats, they tend to favor more relief measures, like maybe expanding loan forgiveness.
That classic debate, right? Government help versus individual responsibility. Where do you think the solution lies? Is there some kind of middle ground?
It's a tough one. You have borrowers who are really struggling to get by, and then you have to consider the fairness to the folks who already paid off their loans, not to mention the potential burden on taxpayers.
Yeah, you don't want to create new problems while trying to solve this one.
Exactly. Finding that balance where we can help people who need it without causing unintended consequences, that's the real challenge.
It's a balancing act, for sure. Speaking of balancing acts, what about Biden's new SVE plan? The income-driven repayment one. Could that be a game changer for borrowers?
SAVE, yeah, it definitely has the potential to help, especially for those lower income borrowers. It offers lower monthly payments, and in some cases, payments could be as low as $0. But, and there's always a but, the future of the program isn't certain.
So it's not a sure thing.
Not quite. Republican lawmakers are talking about cutting back on income-driven repayment subsidies. If that happens, payments could go way up for a lot of people.
The article actually gave an example. They said someone making $30,000 a year might not pay anything under SAVE, but if those subsidies get cut, they could be looking at least $50 a month.
That's a big difference, especially when you're already stretching every dollar.
It sounds like a lot of folks are stuck in this waiting game with no clear answers. That's got to be stressful. But before we get too deep into the politics of it all, let's step back for a second. How many people are we actually talking about here? Just how big is this delinquency problem?
The article states there are about 4 million federal student loan borrowers who are behind on payments right now.
4 million.
And that's about double what it was before they hit pause on those payments during the pandemic.
Wow. That's a lot of people facing financial strain. And we talked about how if things don't change, a lot of those folks could end up in default. Can you remind us, what does default actually mean? How is it different from delinquency?
So delinquency is kind of like the first step down a slippery slope. It means you've missed some payments. Not ideal, but you've still got options to get back on track.
Okay.
Default, though, that's the final stage. It means you've missed payments for a long time, usually at least 9 months, and that's when things get really serious.
So it's more than just a little ding on your credit score at that point. What are the consequences if you actually go into default?
Default can mess up your credit for years. We're talking making it super hard to get loans, rent an apartment, even get certain jobs. You could also face wage garnishment.
What's that?
That means your employer has to legally withhold part of your paycheck to repay the debt. And in some cases, the government can even take your tax refund.
That's rough. It really makes you realize how important it is to understand those different stages of loan repayment and get help before it gets to that point.
I agree. Being proactive is key. Don't just ignore it and hope it goes away. There are resources out there, and the sooner you reach out, the better your chances of avoiding those worst-case scenarios.
So what's the first step for someone who's starting to feel that student loan pressure? What should they do?
The most important thing is to talk to your loan servicer. Don't ignore the problem. Reach out to them and explain what's going on. They might be busy, but don't give up. Be ready to talk about your income, your expenses, any difficulties you're facing.
We've mentioned a few options already, like those income-driven repayment plans, forbearance, deferment. We'll be diving deeper into all of those in the next part of our deep dive. But for now, let's take a little break.
Sounds good.
We've covered a lot in this first part. The scale of this whole delinquency situation, what's causing it, how it affects borrowers, and even the economy as a whole, and the fact that there's no easy fix.
We've laid a good foundation for understanding just how complex this issue really is. And in part 2, we'll dig into some of those potential solutions and what they might mean for everyone involved.
So stay tuned, everyone. We'll be back soon to unpack all of that.
Welcome back, everyone. So now that we have a better sense of what we're dealing with, this whole student loan delinquency situation, let's talk about solutions. Where do we even start?
That's the big question, right? The article mentioned this kind of tug of war going on between the folks who think the government should step in and those who say it's about personal responsibility.
Yeah, that's a great point, and it's a debate we hear a lot, not just with student loans. You've got those who think the government needs to provide more help, things like expanding loan forgiveness or making those income-driven repayment plans more generous. They argue that even with programs like SAE, a lot of borrowers are still struggling.
But wouldn't something like widespread loan forgiveness end up helping those who are already better off? The folks who took out bigger loans to begin with? I've heard that argument from the other side, the people who think borrowers need to be held accountable for their choices.
You're right. That's a common criticism. They say it wouldn't be fair to the people who worked hard to pay off their loans or those who decided not to go to college because of the cost. They're more in favor of stricter repayment terms and worried about the impact on taxpayers.
It's like that classic debate, right? Personal responsibility versus systemic support. How do we even find that balance? Is there a way to address the needs of borrowers without creating a whole bunch of unintended consequences or putting an unfair burden on everyone else?
That's the million-dollar question, isn't it? Any solution that actually works is probably going to involve compromise from both sides. Maybe it's a mix of targeted relief for those who need it most, combined with making college more affordable in the first place so fewer people end up in this situation.
That makes sense. Address the root of the problem while also helping those who are struggling right now.
Exactly. And we can't forget about the loan servicers in all this. They're the ones on the front lines dealing directly with borrowers every day. And the article talked about how they've been having some trouble handling all the questions and requests coming in.
Yeah, there were some stories about people waiting forever to get through on the phone, getting confusing bills, even errors in processing payments. It sounded like some borrowers were missing payments just because they couldn't get the help they needed.
And that's a huge issue. Any solution needs to take that into account, the operational side of things. We need a system that's actually efficient, easy to use, and capable of supporting borrowers effectively.
So I've got this whole tangled web of problems to figure out.
Mm-hmm.
Where do we go from here?
I think a good place to start is remembering that this isn't just about numbers and statistics. We're talking about people's lives, their livelihoods, their futures. The article did a great job of humanizing this issue with those stories of borrowers who are struggling to pay for basic things while trying to manage their loans. It's a human problem, so we need a human-centered solution.
Yeah, those stories were really powerful. It's easy to get lost in the policy debates, but at the end of the day, this is about real people going through some really tough times.
I completely agree, and I think that's something important to keep in mind as we talk about the bigger picture, the impact of this crisis on society as a whole. It's not just an individual problem, it has ripple effects that go way beyond the borrowers themselves.
Okay, so what are some of those wider impacts? What should we be thinking about?
Well, for one, it's making existing inequalities even worse. The people who are already struggling financially, and that often means people from marginalized communities, they're the ones who are hit hardest by student loan debt.
The article pointed out that delinquency rates are especially high among Black and Hispanic borrowers and those from lower-income backgrounds.
That's right. And it creates this extra hurdle when it comes to getting ahead. Student loan debt makes it harder to save for a house, start a business, even invest in more education or training.
It's like this cycle that's almost impossible to break out of.
Exactly. And it can drag down the whole economy. When so many people are dealing with debt, it affects how much they can spend, which can hurt businesses and slow down growth.
And it makes me think about what this means for future generations. If young people are afraid to go to college because they don't want to end up buried in debt, that's a problem for everyone in the long run.
It is. We have to find a way to make higher education affordable without putting this huge financial burden on people.
So it sounds like finding a solution is important not just for individual borrowers, but for the whole country. But how do we even begin to tackle something this big and complicated?
I think the first step is changing how we talk about this issue. Instead of blaming each other, we need to try to understand where everyone's coming from. This isn't about who's right or wrong. It's about recognizing that this is a systemic problem that needs systemic solutions.
So we need to stop seeing it as a personal failing and start seeing it as a shared challenge that we all have to work on together.
Exactly. That means policymakers, loan servicers, borrowers. Everyone has to be a part of the conversation. We need to work together to come up with solutions that are fair and actually work.
That's a big ask, but it sounds like the stakes are pretty high. We can't just ignore this and hope it goes away.
I agree. And this article is a really good resource for anyone who wants to learn more and start thinking about solutions. It lays out the key issues, talks about different approaches, and encourages us to really think critically about the path forward.
It's a reminder that the more we know about this issue, the better equipped we are to make a difference.
Knowledge is power, right?
Yeah.
And it's not just about understanding the problem, it's about knowing what we can do about it.
So we've talked about the big picture, the policy debates, the impact on society as a whole, but in the next part of our deep dive, we're going to zoom in and focus on you, the listener.
We'll explore what you can do, what steps you can take to navigate this landscape and take control of your financial future.
Okay, so we're back for the final part of our deep dive into this student loan situation. We've talked about the big picture stuff, the policies, how this affects everyone, but now let's make it personal. What does all of this mean for you, the listener, and what can you actually do about it?
It's easy to get overwhelmed with all this information. It's a lot to take in. The most important thing is don't panic. Remember, knowledge is power. The more you understand your own situation and the options you have, the better. That's how you take control.
The article really stressed that communication is key. Like, burying your head in the sand isn't going to help.
No, definitely not. If you're having trouble making your loan payments, the first thing you got to do is talk to your loan servicer. They might be swamped with calls, but don't give up. Explain what's going on. Be prepared to talk about your income, your expenses, any hardship you're dealing with.
And we've mentioned some possible options like those income-driven repayment plans, forbearance, deferment. Can you walk us through those a little more? What are the differences?
Sure. So income-driven repayment plans like that Save EE plan we talked about, they can really lower your monthly payments. They base it on a percentage of your income. So if you're struggling to make ends meet, that can be a big help. The thing is, with these plans, you often end up paying for a longer time, which means you could end up paying more in interest overall. And if you start making more money, your payments could go up too.
So you really have to think about your long-term goals. What makes the most sense for you?
Exactly. Now, forbearance and deferment, those let you temporarily hit pause on your payments. If you lose your job, have a medical emergency, something like that, that's when these options come in. But you got to remember, the interest might still keep adding up during that time, which can increase your total debt.
So it's like hitting the pause button, but the clock is still running in the background.
That's a good way to put it. The article also mentioned loan consolidation and rehabilitation.
Right. What are those all about?
Okay, so loan consolidation basically takes all your federal loans and combines them into one. It gives you one interest rate, kind of an average of all the rates you had before. It can make things easier to manage, just one payment instead of multiple ones. And sometimes it can lower your monthly payment too, especially if you had a bunch of different loans with different interest rates and due dates.
Makes sense. And rehabilitation, that's specifically for people who've already defaulted on their loans?
Yes, that's right. It's like a way to get back in good standing, kind of like a do-over. You make 9 on-time payments in a row over a 10-month period. Once you finish that, your loan gets moved to a new servicer and you get a new repayment plan. It can also help remove that default status from your credit report, which is a big deal.
So even if you've fallen behind, there's still hope you can fix it.
Absolutely. And here's another important thing. You don't have to figure all of this out on your own. The article really recommended talking to a financial counselor. They can give you personalized advice, help you create a budget, and figure out which options are best for you.
It sounds like having a professional in your corner can make a big difference, especially when it comes to something this complicated.
Oh, for sure. They can also help you understand how different repayment strategies might affect your credit score. That's important for making smart choices about your financial future.
So besides those more official resources, are there other ways for people to find support?
Definitely. Don't underestimate the power of your personal network. Talk to your family, your friends, maybe a mentor, anyone who's been through this before or has some experience with managing money. Just sharing what you're going through and getting support from people you trust can make a big difference.
It's true. Sometimes just knowing you're not alone in this can make all the difference.
Absolutely. And remember, millions of people are dealing with the same stuff. You're not alone. And there are more and more resources and advocates out there who are focused on helping people navigate this. So as we wrap things up here, I think it's really important to emphasize that this is bigger than just personal finances. It's a societal problem that needs a societal solution. We have to keep talking about this, raising awareness, pushing for change. This deep dive was just the beginning.
Keep learning, stay curious, and don't underestimate the power of your own actions to make a difference.
Well said.
That's all the time we have for today, but thank you for joining us on this deep dive. Remember, knowledge is power, and we're all in this together. So stay informed, stay empowered, and keep diving deep.
Wraps up another insightful episode of the Deep Dive Credit Podcast, brought to you by Elite Credit Solutions, your go-to resource for affordable credit repair across the United States. We appreciate you joining us today, and we hope you found the information valuable and empowering. If you're ready to take control of your financial future, don't hesitate to reach out to us at 813-317-6776. Additionally, don't forget to like today's podcast, share with your friends on social media, follow us, and subscribe to our YouTube channel to stay in tune with future updates. Thank you for listening, and until next time, keep striving for excellence in your credit journey.